Hi, thanks a lot for listening to today's information session. One of the things I want to talk about is why to use personally held life insurance instead of a mortgage insurance policy. It's a question we often come across as financial planners and something that you may experience yourself. It's very common for me to see someone holding a mortgage insurance policy when they take out a mortgage. They'll often have a debt in regards to a home purchase, and now they have a mortgage associated to it, and quite often the lender has asked them, do you want to have mortgage insurance? Nothing that's wrong with particularly saying yes to that. However, there is some great opportunities with holding a life insurance policy in your own life not connected to the mortgage. And some of these things are generally better pricing. You're being pooled instead of a mortgage plan where you're definitely taking advantage of your own better health, usually, inside of a personally owned policy. You're also going to have the ability to have a payout at the full amount and not a reduced amount. And I say that because most people don't realize that if we take out a mortgage of, and I'll use an example, $250,000 mortgage, and we're paying $40 or $50 a month for that for mortgage insurance. And now 10 years down the road, the mortgage is reduced now to $100,000. The payout on your death would be $100,000, not the amount you've taken out. Whereas a personally owned insurance policy, which typically will be, I find generally at a lower cost for the premiums amount, will now pay out at the full amount. So if we've taken out a $250,000 policy at the time of the policy, at death, we'll also pay out $250,000. So right away, you're in an advantage position in that moment. So I would urge you to consider that in your own financial planning and maybe look at why you should replace your mortgage insurance with personally held insurance.